Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 4th of February. It's Super Thursday today. The Bank of England simultaneously releases its monetary policy decision, the meeting minutes, and its quarterly inflation report. No change in policy is expected at this meeting, while consensus is that the vote will be once again split 8-1, with the lone dissenter, Ian McCafferty, to maintain his call for a rate hike. Therefore, the focus will be on the tone of the meeting minutes, the updated economic projections, and only comments from Governor Carney's press conference following the meeting. A lot has changed since the Bank of England published its November inflation report, and the degree to which the new projections will be changed are likely to determine sterling's near-term direction. We expect the bank to revise down its near-term GDP growth and inflation forecast. Officials could state that inflation will edge up slower than previously expected due to the continuous slump in oil prices. On the other hand, given that the labor market has continued tightening faster than expected, we see downside revisions in the unemployment rate forecast. However, following Governor Carney's remarks that now is not the time to raise rates, we believe that an improving labor market would not be enough to persuade the bank to press the hike button anytime soon. The slowdown in China, the continuous collapse in oil prices, as well as the moderate domestic wages and GDP growth are enough reasons for the bank to be patient. But we still maintain the view that perhaps the biggest obstacle for the Bank of England is the uncertainty surrounding the forthcoming Brexit referendum. Therefore, we will be also looking for any hints or comments on how this pre-referendum environment has been affecting the British economy, and as a consequence, the bank's policy-setting framework. Overall, evidence of a dovish rhetoric could diminish market expectations for any rate hikes in 2016 and may put the pound under renewed selling pressure. Elsewhere, yesterday, New York Fed President Dudley stated that financial conditions have tightened considerably since the FOMC raised interest rates in December. If this situation continues until March, policymakers would have to take that into consideration when deciding on interest rates. He also added that any further strengthening of the dollar could have serious consequences for the health of the US economy. Echoing Vice Chair Fisher's recent comments that the slowing global economy could impact growth and inflation in the US, Dudley's remarks push further back market expectations for the second hike to come in March. Investors currently assign a 10% probability for a rate hike at the next Fed meeting. His comments also served as a catalyst for a major sell-off in USD, which weakened significantly across the board. Now, besides the Bank of England, today we get the data only from the US. The preliminary unit labor cost index for quarter 4 is forecast to have accelerated from the previous quarter. Usually this indicator is not a major market mover. However, given the Fed's emphasis on the labor market and just one day ahead of the US employment report, it might attract some attention. Initial jobless claims for the week ended January 28th are expected to have increased, which could increase the 4-week moving average somewhat as well. Factory orders are forecast to have fallen in December at a faster rate than the previous month. This will be the 5th consecutive month of a fall in the figure, and given the recent softness in the industrial indicators and surveys, this could prove USD negative as well. As for the speakers, we have 3 speakers scheduled on Thursday: Bank of England Governor Mark Carney, ECB President Mario Draghi, and ECB Executive Board member Yves Mersch speak during the day. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.